We hear at the moment that innovation is everything, and the next word that comes up is FinTech. And the word that immediately follows FinTech is ecosystem. So these FinTech companies have started, they want an ecosystem, they're going to innovate and they're going to disrupt the incumbents. It's the jargon that you hear all the time. How can FinTech, and maybe this is similar to Bitcoin in a way, how can FinTech disrupt the incumbents if it's predicated on the system that the incumbents already use?
It doesn't disrupt the system. I mean, the best way to think about this as a metaphor is imagine the Apple iOS ecosystem. So that's on the Apple phone, there'll be all these apps that you can get on the App Store, all right? And those apps all run on the same underlying operating system, okay? And the app developers depend on that. Very similarly, the FinTech ecosystem is predicated upon the underlying operating system of finance, as it were, which is run by the banking sector. And many of them plug in, all right? So actually the question you want to ask yourself, for example, is does let's say choose an app on an iPhone, like a gym training app. Does a gym training app disrupt the iOS system of Apple? No, it doesn't. It actually strengthens it. So many fintechs are similar. They actually are plugging into the underlying banking sector and are pasting new layers on top of it and doing interesting little things. But on net, the banking sector doesn't lose power. What can happen, though, is that by pasting a layer between us and the banking sector, fintechs can sort of change the user experience feeling of it. And they might sort of psychologically alter the dynamics a bit. But that's a different thing to bypassing and disrupting the banking sector.
We come back to issuance, don't we, of fiat currency. We come back to who issues money. Because I'm sure if you're talking to activist groups, will say that there is an inherent inequality that arises, I'd argue, a structural inequality when it comes to who gets the money first, who gets money last, and the purchasing power of that money.
Yeah, absolutely. Well, I mean, look, if you're analyzing the fintech, big tech kind of thing, that is the realm of bank-issued money.
Yeah.
I mean, the entire digital money ecosystem is built upon these chips that banks issue out. I use the term chips. I mean, in money jargon, they'll call it something else, like bank deposits or like M1, these type of things. But basically what it's referring to is promises issued out by the banking sector that you see in your account, right? And they are able to issue out those promises far in excess of the actual state money they hold. And that's what's sometimes referred to as fractional reserve banking, or however you want to call it. But the basic point is that the banks issue out a secondary layer of chips that's far bigger than the state money system. All right, and that is where all the companies like Square and Google and Uber with its money app, that's what they're using. Okay, so the shift towards automated finance and fintech and all this kind of stuff is empowering that system. Now, if you're looking at other movements, for example, like MMT and these types of things, they're targeting about the sort of state money system. And my work on the war on cash is about, can you protect the physical form of state money against this banking form of digital money? And I mean, this doesn't resolve all the politics of money. You still have to have a lot of other stuff going on. But the rise of the bank money system under the guise of technological innovation is often not picked up by many sort of monetary campaigners. They often don't really see that.